Proud supporters of Africa this week. Engen, with us, you are number one.
Heads of state, government and prominent business leaders from around the continent met at Cape Town this week for the annual World Economic Forum on Africa. The theme for this year's event was From Vision to Action, Africa's next chapter, providing an opportunity for stakeholder interaction on advancing Africa's socio-economic development. CNBC Africa was at the event covering a wide range of topics. Speaking at the conference, South African Finance Minister Pravin Gordhan said the government was not planning to intervene to weaken the strong rand, which has helped cushion the impact of higher oil and food prices. Lerato Mbele caught up with the minister at the conference for more.
Now, the real issue right now is about the volatility of the currency, about the continuous capital flows and the volatility of those flows, about the fact that within the G20 we haven't yet found a formula which brings together a set of guidelines, if you like, for sending countries and receiving countries. In our own domestic situation, we have the impact that the strong rand has on the manufacturing sector and parts of the export side, although the recent numbers seem to indicate that there are parts of the manufacturing sector that are doing extremely well from the PMI numbers that we have seen. At the same time, the inflationary price increases in terms of fuel and food are buffered in some ways by the strength of the rand at the moment. So it's a mixed picture. We take whatever positives we can get out of the current situation, but the key is we still need to work towards a situation where we have less volatility and greater certainty for all of us.
What's going to give the impetus to a new approach on growth strategies, on job creation, on this inclusivity that's being emphasized? Because in South Africa, the big issue is to create jobs, but also your administration is saying quality jobs.
Well, there's two things. One is that there are formidable challenges on the horizon. North Africa in some ways demonstrates that for both the developed world and the developing world, that continued unemployment, marginalization of the youth and women, and inequalities in societies are not sustainable. On the other hand, there's a huge set of opportunities, particularly on the African continent and indeed in South Africa as well. Now, how do we combine the two to make sure that we can give effective realization to the kinds of things that we're actually talking about? And those two will create, I hope, and I think they're beginning to, a sense of urgency, both about developing concrete plans and about implementing them.
Obviously, you talk about the new reality, and the new reality is that the poles of power are shifting very much in favor of emerging market economies, which at the moment constitute over 25% of global growth, and it's believed in the next 3 or 4 years over 60% of global growth. South Africa, having just been to China as a bona fide member of Brazil, Russia, India and China, that grouping, how is Africa going to benefit?
No, well, firstly, we're part of a group which has a huge amount of weight that it would carry. Firstly, in terms of the size of the countries. Secondly, in terms of the existing economic weight and future economic weight. And thirdly, it reflects the multipolarity that we speak about. That from South Africa's position, we want to keep our relationships with the established economies that we have been dealing with, but there are a new set of opportunities and relationships that are opening up with a new set of economies which are gaining the kind of dominance that you're actually talking about. There's also a realization amongst those economies, the Russias, Indias, Chinas and Brazil, that Africa has huge potential as a market, as a source of raw materials, as a source of agricultural products being developed, but also as a potential for a new kind of partnership. So the question is, how does Africa reach an understanding with both the BRICS countries, but the developed world as well, that development in Africa has to be different. It has to be on a basis of a win-win partnership, and we need to lay the basis for that.
Also attending the World Economic Forum on Africa was Ali Bongo Ondimba, President of Gabon. Lerato Mbele asked him what message his country is bringing to the forum.
Our message is very simple. What can we do to improve the well-being of our people?
So what are you doing to improve the well-being of the Gabonese? Because we do know that the country is minerally endowed, particularly with oil, but it doesn't really do well in the Human Development Index.
Well, oil has been a blessing, but also a curse. So what we want to address, the problem is that to diversify economy. What can we do to make sure that when we run out of oil, we'll still be able to provide the needs of our people? So basically our economy has been based on the selling of raw, material. Raw when it comes to logs, but also when it comes to minerals. And it's important for us to be able to, give also employment to our people and to make sure that we are able to boost, our revenues. It's important for us to go through diversification and naturally through manufacturing of all those, resources that we have.
What about changing the investment complex? Often people, when they talk about Gabon, and indeed a lot of other French-speaking African countries, they talk about that relationship with France and the fact that within the oil industry, you've tended to focus a lot on investments from French oil companies, and the scope isn't wide enough for others to come through. Are you changing that?
Of course we are, and we've been doing that for years. It just, image that that people still want to see us, but France is one of our most important partners. That's true. But we have other partners, even in the oil industry. And to give you an example, since I've been elected and put in office, we have been able to secure $4 billion direct, foreign direct investment, none from France, aside from France. Doesn't give you any indication that Gabon is going globally?
Yeah. And what about environmental issues? Because in as much as energy security is a theme internationally, so is climate change, so are questions around green economies.
The challenge for us is very clear. How can you develop your country, without, making sure, without destroying the environment? That is the challenge. So for us, it was important to see globally and to put two together. But we have to go further than that, than just, being able to say, well, let's save the world, the environment, all these ideas. What is very important now for us is to bring on the business community on board and make environment, a profitable business. Yeah. It's important because we government alone will not be able to raise enough money, to secure a right environment. But also for us, we have to learn from mistakes of others. Others have developed their countries not really thinking about the damage done to the environment. Now, those same countries are spending billions trying, to make up for what they've done in the past. So we have to take a lesson from that and say, well, instead of going that long road, let's find a shortcut, but a shortcut that makes sure that, we take everything into account. So that's what we're trying to do in Gabon.
This year, we've also aimed at finding ways for Africa to sustain its growth path and attract further regional and global investment. Lerato caught up with Oscar Onyema, newly appointed CEO of the Nigerian Stock Exchange.
So your impressions of the World Economic Forum on Africa so far?
Very interesting. A lot of huge potential to come out of this event. I've met with a lot of CEOs of different companies. So I'm excited at the possibilities that we can have here.
A lot of CEOs of different companies. Are you trying to attract them into Nigeria and more specifically to list on the NEC? Because there have been a lot of problems in Nigeria. We know of the market crash over 2 years ago. We know of declining valuations of Nigerian companies. We know of investors being reticent to bring their money into Nigeria. How are you going to try to really improve on the profile of the country?
With the recently concluded, successfully concluded elections, we're very excited that we can at least remove some of the political risk that companies consider. My goal of coming to a Nigerian Stock Exchange is definitely to attract more companies, introduce more products, and make our operational efficiency world-class. And so a lot of the CEOs that I'm meeting today and for the rest of the week, I'll be explaining to them the benefits of coming to access Nigerian capital markets.
What are some of those benefits? For instance, we do know the economy is set to grow at above 7% and that the returns are very attractive.
Right. So if you look at global fund movements, there's been a lot of capital flows from out of experienced developed economies to frontier and emerging markets. Given where Nigeria is today, we do believe that a lot of those flows should be coming to Nigeria. And as we improve the efficiencies of trading in Nigeria and listing in Nigeria, we should it should grow on itself.
I mean, that issue is something that quite prominent Nigerians like the governor of the CBN have spoken about. For instance, when we saw the launch, albeit a very small denominated paper, of the Nigerian sovereign bond internationally, there were lots of concerns in Nigeria as to the pricing of that debt. And there was a sense that it's going to impact on the pricing of a lot of other Nigerian assets, and it wasn't a fair indication of what Nigerian assets are really worth. By your estimations, beyond the benefits of investing in Nigeria, what are Nigerian assets worth? Is it somewhere above the region of 7%?
It's given the economic growth rate, given what the individual companies are doing, you can see that there's a lot of growth opportunity that is not captured in the interest rate for that bond. So I tend to agree with people, but then we're also looking to establish a benchmark from which to get better. So things can only get better from that particular benchmark.
Obviously, a big issue beyond Nigeria is deepening capital markets in general in Africa, trying to get local investors to invest in their local stock exchange, trying to get ordinary people like myself, retail investors, to be active in stock trades. It's an issue of education, certainly in my case, but it's also an issue of reticence where local companies don't see the value.
There are drivers to making capital markets deep in Africa generally. Some of the success drivers would include introducing market makers to actually have a two-way bid and ask, introducing electronic trading to allow for more efficient transfer of securities. Those are just examples. There are so many other things. So I think as we begin to implement some of these things, we should see a lot more depth and liquidity in our marketplace. And I would believe that would be true for most of the African capital markets.